But the coin that I added to the portfolio today is called vEmpire.
And they are the largest decentralized metaverse investment organization in the world.
Hello, everybody, and what a lovely day it is. Let you kick off, and I'll do some button tapping in the background. You know what comes after Roby and Qcoin? When Binance. Hello, everybody. We are having a very good run at the moment. You'll be very pleased to see. It's refreshing, isn't it? Tell you what, if you told me last bull run when we were sitting there at 65 cents that I'd be celebrating getting back to 4, I would have told you to piss off. But now, in the way that the economy is and the market, very pleased to be going, and it should just be the start if what we've got planned, fingers crossed, to announce today comes. Might not be today, but it could be today. Keep you speculating. That's a game. So we have Fluid with us. We have Ahmed, who I believe is CEO, very similar trade fee background to me. So looking forward to finding out exactly what he was doing and where he was doing it. So if we could bring our guest out. Hello.
Hi.
How are you?
I'm very well. How are you doing, Dom?
Yeah, very good. Thank you. Very good. Whereabouts are you? You in London?
I usually spend my time between London and Dubai.
Okay, fair enough. And right now?
Right now, I'm in Spain.
Right, fair enough. Kept us guessing, very much so then.
Yeah.
Yeah, I mean, first things first, just if you'd like to introduce yourself and also Fluid, your background, how you fell into the industry.
Absolutely. So I'm Ahmed. I'm the CEO, founder of Fluid. Fluid is a liquidity aggregator that's trying to solve one of the biggest problems in crypto, which is the fact that liquidity in crypto is pretty poor, even in the biggest sort of in BTC and ETH. And we are using AI quant-based methodologies to try to do that. A bit about my background before coming into Fluid about 18 months ago now. I was a co-founder of Haven. Haven is a multi-billion-dollar now, fully regulated OTC and custody platform out of Abu Dhabi. And before that, I had a 15-year career in investment banking. As CEO of Jefferies for Middle East, Africa, Asia, also at Bank of America and Credit Suisse.
Tell you what, it's better than my trading background. God, putting me to shame here. Lonely old derivatives trader me, and never got the CEO until here. Just associate partner at St James's Place for my sins. Very impressive. Now, you'll have to explain, because not everyone is from a background in finance. When you talk about approaching us from a quant level, could you go into more detail for the audience? Are you CFA yourself?
I'm not. No, I've got nothing. I'm not a CFA person at all. But when we say quant-based methodology, we don't just use quant-based. We actually use quant-based and machine learning. So our infrastructure, if you like, gets us around 98% accuracy in predicting order books. So let me just take a step back and say, what does Fluid do? So what is a liquidity aggregator? So if you look at Skyscanner, which is when you want to buy cheap tickets, you go to an aggregator, a travel aggregator, which finds all the deals in the market and puts them in one place. Liquidity aggregator does something very similar, but with crypto. So we go and scan all the exchanges and put all the exchange data, all the order books aggregated in one place and give it to you. Why do we do that? So you can get the best possible deal in the market. If you say you're buying BTC USDT, for instance. Now, why do we need to use quant-based methodologies and all these fancy terms? It's because by the time you connect to us, you as a user connect via our systems into the API of the exchange order books. We get the thing, the order back. You say, yeah, I'll take it. By that time, that round trip, you've lost about 1.5 seconds. Now, anything, as we know in crypto, can happen in 1.5 seconds. But usually, you price a risk. So you go, hey, I'm going to take a 1.5 second risk on this. So I'm going to charge you 1%, or usually it's about 80 to 90 bips. So it's 0.8, 0.9%. So if you're an OTC desk and you're using a liquidity aggregator, you're paying about 0.8, 0.9% on a cost basis, more than just going directly to the exchange. So what we do is that we use quant-based methodology, so very sophisticated statistical methodologies overlaid with machine learning and AI to try to bridge that gap. So 1.5 seconds we'll predict. We'll take the risk, we'll predict it, and we'll give you live exchange order data, meaning that latency is 0. And why is that important? It's because we can truly give the best possible prices on the market. And that's how we drive volume. So people come to us if they see the best price in the market, they'll take our price no matter what, because we give with confidence. We don't price any risk, we price 0 fees, and that's how it works in a nutshell.
Yeah, that is quite a wide encompassing nutshell. So are you which chain and what sort of blockchain tech are you using for this?
Right, so we're building on ERC20. We're building the token on ERC20, but we're moving it onto Polygon, who are one of our partners as of next year. But the most important thing is not the blockchain technology. The reason we're doing it on a token is to give users the ability to incentivize them, to give them some utility and give them access to the product, discounted fees, also participate in the revenue generation of the product. So you have real utility. We're not a science project. We are in a way, because we use very sophisticated AI and machine learning techniques. And we have a partnership. Dom, you're from the UK, so you know this. We have a partnership with Imperial College in London, which we're going to be announcing soon, officially. And that partnership gives us access to, very, very intelligent postdoc students who are going to help us bridge our data science and AI gaps from, the accuracy, which is around 99.1%, up to close to 100%.
Almost sounds like financial advice and a guarantee.
Yeah.
Well, of course, we don't give any of those, but we're throwing 99.1s out there. But we'll take that. So you mentioned about the background in sort of Jefferies and traditional finance investment banking. Where did the actual sort of crossover and change come from?
Why fluid? So I started off about 2017. I was in investment banking, and I saw that investment banking was really clunky. It seemed like a big spiv machine, and I felt that it wasn't going anywhere. It was an industry that was really in true structural decline. And I was, I'd done 15 years. I've got to the highest level. Got bored. And this is where my entry into crypto. I saw crypto, and I saw that, on CNN and CNBC, you could still see the ticker for Bitcoin. And while it was a $200 billion asset at the time, yet it was purely for retail. Now, why didn't institutions such as the ones that I used to cover when I was at Jefferies, why didn't they participate in crypto? Well, it comes down to two things: A, regulation compliance; B, liquidity, counterparty risk, cybersecurity risk. A lot of these things around sort of not being institutionally ready. Hence, I found my first company, Haven. Haven is a fully regulated OTC and custody platform. We spent years and years and years and millions of dollars getting that license, and we were the first to get it. We're based in Abu Dhabi. And when I was building Haven, the biggest problem we had was pricing. How do we get, a lot of our clients at Haven could say, look, I could just go to the exchange and I could get better pricing. Why should I use you? And the reason was because the biggest problem we had was liquidity in crypto was so fragmented, and it still is. it's held in the top 5, 6, 10 exchanges in a few whales. Now, the problem here is that there is a lack of interoperability between all the different exchanges, right? So the exchanges don't talk to each other. They all keep their own crypto to themselves. And so that's where I thought this is where we can fit in as Fluid. And the world needs a product like this. And hence I went on my journey. We raised a ton of money, and we hired who we feel are fantastic minds who have experience in building this technology for investment banks, and also great minds in data science and machine learning to really put this together and go out. And our TGE date is we were going to go out in May, and thank God we didn't.
Everyone's pushed back. Tell you what, it's bad. It's bad for when we're sort of writing tickets ourselves. Bloody, it's all the outflow, not getting any of the cash flow back. But yeah, everyone's pushed back, haven't they? But yeah, you were about to say, have you got a new date?
So we're looking at we're TGE ready, so we have a very strong token, all the sort of technical stuff's done, ready to go. But also from a community standpoint, we have an exceptionally strong community of 7,000 strong. Telegram, just in our Telegram groups, and those are real people. They're not and they're engaging, and they have competitions, and they argue and do all of that stuff. They're not just bots. Yeah. And then we have a very active Twitter community. We have 20,000 people on Twitter, and we have you see us on CNBC a lot. You see us on Bloomberg, and you see us on all the sort of big financial publications. So we're active, and it's just a case of when the market will be ready to go to TGE. And there's no reason to rush it. So really what we're doing is focusing on our product. We have a very big release coming out in the next few weeks for our MVP. And then beyond that, you're going to see us come out with a lot more releases. And, we have enough cash flow to keep us going for the next 3-4 years. But we'd love to go out and get live and go to TG, but only when the market's ready for it. There's no point in doing this and burning all the investors when the market's not ready. Yeah,
I mean, it's always a decision to sort of to pick and choose a date. I mean, it's getting to the point. I said to a lot of my advisory companies who've pushed their TGEs now, because going from May, I mean, it doesn't really look like the world's going to get very predictable again anytime soon. So it's getting to the point where it's for example, at the very bottom on June, one of the companies we invested in, they were due to launch their token then, and they would have timed it to perfection. But everyone sort of pushes it back because, it's getting to the point where a lot of people are missing out on good times, waiting for a perfect time. I'm not sure whether there's going to be one soon, but it all depends on the Fed, doesn't it? One thing I was going to say, you mentioned about the two reasons banks and sort of investment houses haven't sort of got into this, which was the liquidity and regulation. But if you got the third one, they want to charge fees to launder money themselves.
Yeah, I mean, that's true.
HSBC will happily take that on.
Yeah.
But I digress. I better not get done for libel from this show. I'd get a bit of a disappointed community. But I mean, people don't realize with exchanges in particular, we're on KuCoin, Gate, MEXC, Huobi, Bitmart, and people honestly do not realize just how little liquidity is on anything below like you said, the top 10, even the top 10 sometimes, I can only place decent sized market orders, over 5 figures, let's say. I can only place those sort of size orders through Binance, FTX, Coinbase. even if I'm depending on the pair, obviously, if it's like any altcoin below the top 20, if I try and buy something like 5 figures at market, you can't. Like I'd say OKX as well. You can tend to, but even then, like the depth just isn't necessarily there. But people think that just because an exchange exists, there's so many users and there's so many organic buyers. But really, like some of the exchanges we've launched on, it's not even worth the counterparty risk of having market makers on them, because there's just not enough organic volume. But people are very, very desperate for you to list a token on exchanges, but a lot of them don't realize that sometimes the sort of risk to reward and the cost versus reward isn't there until you start getting to, I'd say MEXC plus, MEXC, Gate, Qcoin, Huobi, they have a decent level of volume, but even then, you won't necessarily get orders filled straight away at market. But yeah, I mean, it sounds like I know for a fact there's definitely room in this market, and it would be solving a really, really big problem, not necessarily one that retail will be fully aware of, but certainly from a B2B and a token side. But yeah, you've mentioned about Haven before, and you've mentioned a illustrious career. Good time to use that word. So what was it? Was it simply getting just bored of traditional finance and sort of finding this area fascinating?
Yeah, I mean, it was a bit of both. I started off actually as an engineer. I was a chemical engineer, and I graduated from engineering, and I felt that I wanted to get into finance because I wanted the intensity and the excitement, and got that and some. And then I guess I moved up the chain quite quickly within what I was doing in investment banking, but at the same time, I was never really fulfilled for a number of reasons. A lot of us don't like working for other people and big corporates. But more importantly, I think it was what we're trying to do. And I felt that really banking was in true structural decline. It was just hypocritical. It was clunky. 80% of my time as a banker, I'd be using to not to do the stuff that was interesting in banking. But it was more all the KYC and the compliance and the completely dumb, unnecessary questions, just to make some guy in some office in New York a little bit happy and justify their paycheck. And it was just sort of stupid. That's not to say that I'm a fan of regulation. I'm a big fan of regulation, and I think regulation protects everyone. It protects you, it protects me, it protects everyone, because we know what rules we're playing, and there's an engagement. There's a rule of engagement. This is, if you do this is what happens. So don't do it. And I felt that was, that is, so from moving from a world that's very, very heavily regulated into a world that is completely cowboy was a bit of a shift for me. It was a shock, but it gave me a very clear gap in the market. And I thought, look, crypto is meant to be solving a lot of the problems and challenges that traditional finance is, but it's not there because of regulation. Well, guess what? I've regulated a bank before. So it got me thinking, and it got me doing, and, we raised a ton of money for Haven, were the first to get it regulated. Long journey, it took 3 years to get the license, and 2 years to get the full license. But now, knock on wood, the business is doing exceptionally well, growing very fast. It's
not ended up like Celsius.
Yeah, and that's the other thing, is that we in any business that I create, I focus a lot on risk management. It's very hard as an entrepreneur to really not focus on the upside. A lot of us either focus on the upside too much that we get burnt. But for me, I think what makes a business successful is your ability to mitigate risk and grow at the same time. And if you're able to face those headwinds, then you will succeed. And that really is, I think, the secret sauce.
Definitely. Funnily enough, you say secret sauce. We actually, we were, it won't mean anything to you, but we were announced, VEMP was announced as a secret sauce yesterday. It literally no relevance, but it just made me laugh. But I 100% agree with what you're saying in terms of going from one environment to another. I joined, I started out as a stockbroker, junior broker, 250 phone calls a day, phone bashing, cold calls, making myself impervious to rejection, but loving the buzz of it and, nailing a sale down. Then I started trading the client's money. And then I thought, you know what I'll do? I've been really, really good at this. And I've gone from junior broker to head of desk, senior trader. I'll join SJP, FTSE 100 company, to be a wealth manager and associate partner, and then joined suitability reports, like letters of authority, like writing down all of these financial plans for people working in JP Morgan investment banks, and doing their financial planning. And just to write somebody to do somebody's pension aggregation, it was just literally, that's where I lost my hair. I just couldn't do it because I went from such a fast-paced trading environment. I went from 4 screens, looking at all these charts, to just on this little laptop writing little reports, and yeah, it was awful. And then after that, I joined. I went into VC, back into more of a sort of sales environment, and then eventually started vEmpire. But yeah, it's can't go back once you've worked for yourself for a while. You just can't pick it back up.
What does vEmpire stand for?
So V is virtual. So vEmpire. So since my background after wealth management, my VC was it was private equity, but it wasn't Facebook, Google, Amazon trying to find these unicorns. We were asset-backed investors, so pubs, hotels, care homes. We would take charge of properties if people's trading and businesses didn't go well, which lent into what vEmpire does, which is buying metaverse and gaming assets. Because unlike most tokens where you're just backed up by just code, or sometimes in DeFi they'll do lending, with buying NFT lands and NFT buildings and developing them, yes, the assets are virtual, but you still have an asset-backed element. So we publish reports. There's one on our website now, the old one. We should have the new one out very soon. But we try and run them. Obviously, it's not, you'll know what is the word for it? It's like a standardized asset valuation model. There's a word that I'm thinking of. It's like a stave report or something like that, that accountants used. But it's as close as you can get it, because how do you value virtual property? We decided that we do it by lowest equivalent floor price, so finding assets on the secondary market similar. But yeah, this is the new world we're in. You have to actively try and find a way to standardize virtual property valuations, because no one else has done it before. But that's what's so exciting. It's like coming out of it's like a Neanderthal can invent anything because there's nothing around. The wheel, simple, go over, build a house, invented a house. So we're you're able to be a pioneer in the industry by trying to think of simple things like, how do you value metaverse property? And that is a new frontier of blockchain. So exciting.
Very exciting. Yeah, there's a lot going on. And it's good to see that it's good to see that the virtual world is mirroring the real world in some senses.
Well, Yeah, hopefully just in some senses. But then again, there's already some very interesting stuff going on with virtual properties. There's a company that's got they've got a virtual real estate investment trust. So it buys properties. It then rents out, these are casinos, it then rents out a parcel within its casino to a user. They take 80% of the profit. The user takes 20. So this virtual property investment trust buys NFTs that themselves rent out NFTs to users, but the investment trust itself is an NFT, and they sell portions of that NFT to other users. Sounds a lot like a CDO, doesn't it? Collateralized debt obligation. So again, we don't have the regulation. So you can do all of these mistakes can be repeated, which is, I'm not sure if you saw it, but the same thing happened with Bored Apes. You had liquidations from people who'd lent against their apes, and then those ended up sort of going and getting bid on for like 70 ETH. And it was like a cascade of Bored Ape liquidation. But
yeah,
as much as it's bad, it is exciting to see people learn live and to see these things. As long as it's not you, it's quite good to observe these things blowing up so that you can see how it works. But yeah, it's certainly very much learning from other people's mistakes, and as long as you can sort of get away with them. What was your?
Go on.
I was going to say, what was your specialty? Because investment banking is so broad. What?
So I was always on the. I was always on the M&A and capital markets side. So I started off in M&A, did a lot of capital markets deals, did about $80 billion worth in DCM and ECM over my career. And all sorts of funky, weird deals and all sorts of boring, plain ones for big governments. But I focused a lot on the Middle East and Africa. I focused a lot on tech, and I focused a lot on healthcare. But it was really, being in tech and seeing the valuations that the eye-watering valuations that got me very excited, and probably opening my eye to crypto in the first place. But I think also, to your earlier point, how I think it's very exciting how DeFi is solving a lot of the problems and actually doing a lot of the things that banks are meant to be doing, albeit peerlessly. And the idea and the concept is so cool. It just comes down to the fact that the world is not ready for it yet. And one of the big problems comes down to regulation, and I talk about this a lot. Regulation and compliance. Coming back to our earlier points again, in compliance, you can manage the ports, right, and the railways, but you can't really manage the seas. And what does that mean? DeFi is supposed to be decentralized. How do you police all that environment? It's very, very difficult, and it's not yet ready. And what we saw with Luna in May was a direct result of regulators not being able to regulate DeFi. Luna and UST, the whole debacle caused a massive collapse, as we saw. And that's because regulators weren't able to get in there and say, hey, guys, this is wrong. You're misleading investors. And that was the point I was trying to make earlier about DeFi. But you were going to ask me something completely different.
Yeah, well, I mean, the thing is, I was never a lunatic, even on the sidelines. I always knew Luna. I knew UST, I knew the arguments, but I was never sort of in depth into how the mechanism worked or anything like that. Usually because, just seeing the guy on Twitter was enough to put me off. It seems to be individual personalities like Do Kwon. The other one was the free AC guy, and Justin Sun is also known for that. But yeah, that sort of put me off looking into it in more detail. And then by the time you look, you see it at a price, you think you've missed out. Then it goes up obviously double. Then you think you missed out. And then by the time you buy it, yeah, there you go. Then it's probably on the edge of the USD thing. But yeah, I was never too heavy and sort of knowing about how the exact algorithmic stablecoin debacle ended up going down. But yeah, I mean, there's always arguments with regulation, and regulation, again, if you're anything like what my experience was in finance, regulation is there for you to push as close against as very, very possible without crossing over it, or without getting noticed that you're crossing over it. My experience in finance was very much so when we were, calling up clients to place a trade. So you had to say, you had to give 2 reasons for the trade. You had to say why you were looking at it. You had to mention the exact sort of commission prices, the stop loss, the take profit. And it was always sort of, how can I say this as quickly as possible so that I can place a trade? Like, honestly, sometimes it would just be gibberish. It would be like, want to buy the 5100 here, so and then place a trade. So I've always found with, regulations, it's very much a nice to have view of companies. But it's just my take. I mean, I was very, I was advisory CFDs and spread betting. So I was very it was all highly leveraged stuff. We were dealing with a lot of people who were pretty much just a gambler, but they didn't want to be seen at a roulette table. So they went and they did derivatives instead on stocks and CFDs, spread betting. But yeah, I mean, even then it was very close to the line. So I don't know, regulation is always a question. It depends very much on the country. It depends on who is actually pushing it. But I've always found that it's, very much what people get away with it, don't they? I mean, some certain institutions will actively set aside budget to pay fines because they know they'll get caught doing stuff, which in itself makes me think, what's the use of having it in the first place if you're budgeting for money laundering fines? It's like what I said about, Bitcoin, the third thing of banks, why they don't like it, so they can do it themselves. But getting more into a question of sort of DeFi and my hatred of banks. But we do have a lot of questions actually from our audience. Unfortunately, you've won the beard game. The touch of grey has beaten me. That's one of them. What big things is coming? So you mentioned that you have something important. You said it was like the MVP, I think you said.
Yeah, so we're going to be releasing the MVP in October, and then along the way we're going to have the bigger alpha and beta releases early next year. So those are the big things. We've got a few other very, very cool announcements, but I won't give too much away.
You can't drop too much alpha. So one thing I didn't ask is, have you sorted out, or can you tell us if there's a certain launch pad that the token will be launching from, or will it be a direct IDO, stealth launch?
Very good question. At the moment, we're kind of evaluating all the options. From what I see of the market right now, launch pads are probably not the best route to get the right liquidity on our token. We are strongly considering and aiming towards an IEO. We have contact and more than contact. We have advanced discussions with a lot of the big tier 1 exchanges, and the plan would be to go on that as an IEO rather than just do a launchpad thing. And launch pads worked about 2-3 years ago, but I feel that they don't quite have the liquidity that you would expect, and a lot of the time they're very, very expensive as well.
Yeah, there's a couple that come to mind that I can we can always chat about it. after? I guess it depends. I mean, with DEX liquidity, it's very much sort of what you make it in terms of you can't just suddenly have a IDO and then everyone starts buying. You got to very much build up the hype. But again, exchanges. If there are any you're talking to, we're on quite a few, so I can definitely help put some meat on the bone, especially for protocol focused on liquidity. I'm sure you'll want to know where our organic volume is, which I won't mention now because again, exchange is watching this. They might hear me. Don't want to get us delisted. Let's see what else we have got. I keep going past the beard comment. Grey is the color of experience.
Who's? Do I see these comments?
Yeah, if you click comments on the right hand side.
Oh, okay, got it. Now I see it.
Scroll down. So yeah, we've had a good amount. Here we go. When do you see regulated DeFi mechanics being integrated into everyday society? Assuming you think that's a possibility.
Oh, very good question. So I think that pure DeFi, we're a long way away from pure DeFi. So I like calling it hi-fi, and that's hybrid finance. And I feel that a lot of the aspects, the whole concept of DAOs, will be integrated within the banking framework and within insurance companies to basically make their operations a lot more efficient. We all see the benefits of DeFi, but the systems, I don't think that you'll be able to have a truly decentralized insurance product for some time because it's very hard to police. And as I said earlier, you can police the ports, but you can't police the seas. So meaning that you can police people coming in and out. So having a DeFi product within a bank, within like Citi or JP Morgan's finance stack, I think you'll see that very soon. But I don't think that you're going to see pure DeFi becoming mainstream sort of day to day and being very widely accepted very, very quickly. I think we have some time to go still.
Fair enough. I agreed on that. And are you going to be aggregating liquidity across just centralized exchanges or DEXs as well?
Both CeFi and DeFi liquidity will be aggregated on Fluid. We want to be the leading crypto liquidity aggregator. And we think that we have the secret sauce to do that. We think we know.
All about the secret sauce. We got one more, another good one. Does too much regulation and compliance negate the decentralization aspect in DeFi? Can there be a space for privacy with compliance included?
Fantastic, brilliant question. I think that too much. Well, there's no such thing as too much regulation. There's something that's right regulation and wrong regulation. Regulation is there not to hinder business, but regulation and compliance is there to make everyone's lives easier. Meaning that if for instance, stops things like theft and money laundering, and make sure that if you're an interdealer broker, you're doing right by your clients. For us as Fluid, what we do is that we practice what's called best execution, meaning we are looking to always give our clients, and you'd know this as a in the finance space, is always giving your customers, your users, the best possible price, right? Without screwing them over, without trading on the other side and screwing them over. And that's what we're trying to do here. We've talked about how it works, but compliance is not there there's even a little bit of wrong compliance is too much compliance and too much regulation. So I don't think that it's a case of too much or too little. I think it's a case of right and wrong.
Fair enough. Yeah, absolutely. The sort of trading and taking the other side of trades. I mean, with centralized exchanges, and you saw some of the stuff that happened with Celsius. There was also another one. Was it Nexo? Maybe I'm making things up. But there was another one that I think what they were doing was they would pay. there was some sort of whistleblower, and I think it was for one of these like Celsius equivalents, that said that they would like offer staking rewards of like a certain high amount. Like let's say it was SHIB, and then people put the SHIB on, and then they would go onto like Binance, go onto like 100x leverage short, and then they would dump all the SHIB market, buy it back, keep the difference. Thank you very much. We'll move the staking to a new token now.
Right.
But yeah, you see stuff like that. There's certainly room to say, guys, you probably shouldn't do that. But at the same time, there's like, the form filling, the administrative tasks where you're just doing tick boxes for management.
Well, Dom, that's a perfect example of right regulation versus wrong regulation. The whole form filling task, well, that should just be done by an AI bot, for instance, or some bot of some kind. There's a lot of reg tech around. The problem is the red tape within a lot of institutions to take up new regulations. A lot of banks are way too clunky to even look at stuff like this. As you said, people are still thinking that Bitcoin is used for money laundering, it's so old. Like, grow up. The world's moved on. We're not in 2012 anymore. We're 2022. And unfortunately, a lot of the banks are going to have to learn the hard way with all the disruption that's coming to start to think through how to be more compliant. We can talk about this all along, but one thing I wanted to say as well was that one of the key things that makes market manipulation harder is liquidity. The problem, the example you gave is a perfect one of people moving, short, staking, shorting, moving on, right? And that's pure market manipulation. And they cause flash crashes because basically there's no one to trade against them. So they can own the market and they can manipulate the market as much as they want. And the whole point of us is that the whole point of what we're trying to fill the gap here is, hang on, we know thousands of other traders who'd love to own this stock and love to trade this stock. So if someone is trying to manipulate the market that way, naturally, if there's liquidity in the market, it's going to be very, very expensive for them to do that. And that's the whole point of being liquid, and no pun intended, being fluid.
Secret sauce. Liquidity is honestly the most, in any aspect of finance, like one of the most important but least understood aspects of all of it. It affects everything. Literally, even like down to like when you buy and sell a stock, if you do it on Hargreaves Lansdown, it's name stock. Why is the spread so big? Like counterparty risk of taking it on as a broker, etc. Just the breadth of things that liquidity actually solves is astronomical. But yeah, we do have one which is sort of touching on one more that came in. Anybody who does have additional questions, do fire them in now before we wrap up. But yeah, SS Forevers raises a important point, which is, but who are the ones at the helm determining where that line is drawn? And can you give us a real world, simple example of how Fluid operates?
Okay, very simple. BTC at the moment, BTC USDT. If you look at BTC USD over the last 12 months between Kraken and Binance, and we've done this analysis. See if I can share it actually.
You should be able to click the little share.
Hold on. I've got an old chart, but I'll share it anyway. It's correct, but there's just some labeling issue. Hold on. Current app.
You might be able to tell me something I've always wondered, right?
There you go.
What?
Ooh. So, and this shows you, if you look at the two charts on the right, The labeling on the bottom one is incorrect. I've just realized, but this is supposed to be over the last 12 months. But if you look at BTC USDT delta, meaning the price difference between Kraken and Binance, this is what you see. You see that, sorry, it's the top chart here. You see over the course of the year, at one point, that reached $1,500 difference in price. Over the month of June, you saw spikes between the biggest two exchanges of over $150. Do you see that on the right-hand side?
Cool. People are gonna start seeing my blackheads on my forehead. I can see that. Arbitrage bots must have had a field day.
Exactly. And the whole point is that arbitrage bots have a field day because they can buy something, because markets are inefficient. And markets are inefficient because there's low liquidity, meaning that you can't move liquidity from Binance to Kraken that easily. It's not happening on the most liquid crypto asset that exists. And that is a big sign to show you what's going wrong here.
I mean, well, then again, even the stock market over the past 2 months is literally retail is manipulating it. The whole pump that we just had back up to 4,325, all the hedge funds literally just have options shorting derivatives on the sidelines, whilst it slowly grinds higher by retail in a stairs up, elevator down market, because the only people buying are pension allocations, which come in no matter what, or like normal stock ISA allocations that come in like monthly, as well as retail, whilst nobody with any sense is actually buying at the levels that we saw of like 4,000 plus. So even the current market, it's only going to get worse when the Fed starts actually putting quantitative tightening in place and starts pulling liquidity from the market, which is why I am a super bear on the stock market. Anyway, in particular, let's see what the Fed does about the pivot, because it's all down to them. But yeah, liquidity 100% one of the most misunderstood and important aspects of this space. Interesting question here that's come through. Is Tornado Cash a version of your good or bad regulation, where the government has basically banned the whole thing? I mean, I have my personal view on it, which I don't want to influence your own, but my view is it's like BMW getting cars banned because some people without licenses are driving them. I know it's
bad
the
regulation. This is an example of bad regulation, and it's fear mongering, because the regulator is so far behind the curve that they effectively are making big, bold, rash decisions that affect so much more. So this is bad regulation coming. Absolutely. It's lazy.
Yeah.
It's lazy. It's not the fact that it's good or bad. It's just very lazy. And lazy regulation means that the regulators aren't doing their job. The whole point here is, I mean, even look at stuff going out of India or China, when the regulators are just so far behind the curve, and there's such a lack of human capital within regulatory bodies that they just ban it. I don't understand it, so I just ban it. But having said that, there is a lot of good regulation around. Two regulators I really like. One is the Abu Dhabi Global Market, the ADGM, which has a very tough approach to businesses setting up. I told you it took us 3 years to get a license there, and they asked us every single question under the sun. But the reason they ask us every single question under the sun is because they are able to help us ask those tough questions and get our processes much better, so that we protect ourselves by protecting the customer. So we have enhanced, as a result, we have much better cybersecurity processes and procedures. Right?
Yeah, I remember.
It forces us to not be lazy, and so there are good regulators around. The Dubai is also creating, making some very bold moves in crypto. Binance and FTX now have their headquarters in Dubai. So I think regulators have a long way to catch up globally in crypto, but they have made huge strides over the last 3 years, I'd say.
Yeah,
I'm talking about it today.
Yeah, the back in my old trading world, you would know if what we called spank houses, which were the sort of wine brokers, whiskey brokers, unregulated investments, and you would always know when you were dealing with one, because they would say, "Oh yeah, we're regulated. Where? Cyprus." And so I swear you could literally. I'm pretty sure that it was just a case where you could just buy it. So that's all the questions that we have so far. But yeah, no, been really interesting, and definitely going to ask you a few questions in the Telegram chat. But yeah, no, thanks so much for joining us. And anybody who wants to ask questions, go and visit the website, and you can get the social links coming to the Telegrams, and you can ask there. But yeah, thanks so much for joining, Ahmed. And yeah, we'll speak on Telegram in a minute.
Absolutely. Thanks a lot.
Nice one. See you later.
Bye-bye.